Strand 3. Applied Arithmetic for Junior Certificate Students. Today's topic, income tax. On completion of this podcast, you will be able to recognise the difference between gross pay and net pay. You will be able to list examples of both statutory and non-statutory deductions and know the difference between both. And finally, you will be able to calculate income tax and net income. In completing exercises based on income tax and other similar topics, you must know how to work with decimals and how to calculate percentages. Click the links below to begin revision of these topics. So what is income? Employees earn money for the work that they carry out. Income is the sum of all the wages, salaries, profits, interests, payments, rents and other forms of earnings received in a given period of time. Someone who is paid a wage receives a pay rate per hour multiplied by the number of hours worked. If you are paid the same amount regardless of the number of hours worked or goods produced, you are paid a salary. Unfortunately, most people cannot keep all the money that they earn. Employees have many deductions made to their earnings before they receive their money. Gross pay is money earned before deductions are made. Net pay is money received after all deductions have been made. Deductions can be statutory and non-statutory deductions. Statutory deductions are payments that must be made to the government. The law requires employers to withhold these deductions from employee paychecks. Statutory deductions guarantee you pay what you owe whether you want to or not. PAYE is one example of a statutory deduction. PAYE stands for Pay As You Earn and is used for payment of public service such as healthcare and education. Pay-related social insurance, also known as PRSI, is another example of a statutory deduction. PRSI contributes to child benefits and old age pensions. Non-statutory deductions are voluntary deductions. They are taken from gross pay by the employer at the request of the employee. Some examples of non-statutory deductions include healthcare payments, union fees, and pension payments. There are two rates of income tax in Ireland. The lower rate is called the standard rate of tax, and the higher rate is called the higher rate of tax. Tax is charged as a percentage of your income. The percentage that you pay depends on the amount of your income. The first part of your income up to a certain amount is taxed at 20%. This is known as the standard rate of tax. The remainder of your income is taxed at the higher rate of tax, 40% in 2015. The amount that you can earn before you start to pay the higher rate of tax is known as your standard rate cut-off point. Remember, tax rates can vary from year to year and from country to country. Currently in Ireland, the first €33,800 that a single person earns is taxed at 20%, and any income above this amount is taxed at 40%. For a married couple where both people are working, the first €67,600 is taxed at 20%, and any additional income is taxed at 41%. Tax credits reduce the amount of tax that you have to pay. These credits are deducted after your tax has been calculated, and so a tax credit has the same value to all taxpayers. After your tax is calculated, as a percentage of your income, the tax credit is deducted from this. So a tax credit of €200, for example, will reduce your tax by that amount. You may be entitled to various tax credits depending on your personal circumstances. Currently, a single person in Ireland receives tax credits of €1,650. Gross tax is the amount of tax owed to the state before tax credits are deducted. Tax payable is gross tax less tax credit. Calculating income tax and net income. Let's look at an example. Kate earns €36,000. She pays tax at a rate of 20%. Her tax credit is €1,650. We are asked to calculate Kate's tax payable. Let's look at the solution. Step 1. To calculate Kate's gross tax, we get 20% of €36,000. This works out at €7,200. Step 2. We must now calculate her tax payable, which is gross tax minus tax credit. So €7,200 minus €1,650 gives us tax payable of €5,550. Tig has a gross annual income of €36,300. The standard rate cut-off point is €37,000. He pays tax at a rate of 22% and has tax credit of €2,016. We are asked, what is Tig's net income? Let's have a look at the solution. We begin by getting 22% of Tig's gross annual income, which gives us a gross tax of €7,986. Note, Tig earns an amount less than the standard rate cut-off point, so tax is calculated only on the €36,300. Step 2. We are now going to calculate Tig's tax payable by subtracting his tax credit of €2,016 from his gross tax of €7,986. From this, we find tax payable worked out at €5,970. And finally, step 3, calculating Tig's net pay. Here, we subtract our previously calculated tax payable from the original gross pay. €36,300 minus €5,970 gives Tig a take-home net pay of €30,330. But why not try it yourself? Jack earns €30,000. He pays tax at a rate of 20%. He has a tax credit of €1,900. He has also instructed his employer to pay his annual health insurance premium of €600 from his salary. You are asked to find Jack's tax payable, his total deductions, and his net pay. Remember to read the question carefully and to attempt each part step by step. Now that you have covered income tax, you can move on to other related topics such as VAT, household bills, percentage profit and loss and selling price, discounts both allowed and received, currency exchange, and compound interest. In studying applied arithmetic, you will find links with several subjects such as home economics, geography, and business studies. On completion of Section 1 of the Business Studies course, The Business of Living, you will be able to identify sources of income, as well as regular and additional statutory deductions. You will be able to interpret a wage slip and estimate or calculate income. In the Consumer Studies section of the Home Economics course, you will look at money management and planning a budget. You will examine case studies of personal and household budgets. Mastering applied arithmetic as part of your mathematics course will give you a great advantage when covering these topics. So, have you achieved the learning outcomes? Let's take a look. You are now able to recognise the difference between gross pay and net pay. You can now list examples of both statutory and non-statutory deductions and know the difference between both. And you are now able to calculate income tax and net income. Well done.